Welcome to 10th video in Final Accounts Adjustment series. In this problem we are given various items. We have to indicate how these items are going to be shown in balance sheet. To start with, credit balance in bank column of cash book. Okay, cash book generally it will have debit balance, meaning it's an asset. If it is having credit balance, then that indicates it is a liability. And here the credit balance is in the bank column. So this credit balance in the bank column is basically a liability, which may be bank overdraft. Okay, so this have to be shown under current liability in balance sheet. Next, debit balance to the account of A, who is a customer. So A is a person and the balance is debit. It means it indicates that money is due from this customer. So this money, whatever due, should come under sundry debtors, and that will reflect under current asset in balance sheet. Next, credit balance in account of B, who is supplier. So B is a person and the balance is credit, which indicates you have a liability, you have an obligation to pay to Mr. B. So this indicates you have a liability, and hence this will come under sundry creditors, and so it will appear under current liabilities. Next, debit balance in account of C, who is a supplier. Okay, now this is different when compared with the second item. The second item is debit balance to the account of A, who is a customer. Okay, whereas here the debit balance in account of C, who is a supplier. See, when you purchase goods by making payment to supplier, what will happen? Purchase account debit to cash or bank. When you purchase on credit, what will happen? Purchase account debit to supplier account. That is, supplier account will be credited. But here they are saying debit. So what does that indicate? That indicates you have paid advance to supplier. You have paid advance to supplier. So this is basically right. You have right on the supplier for the advance you have paid. So it's an asset, and this basically comes under current asset. Since you have paid advance to supplier, he is going to give you goods in shorter period. So for that reason, we classify this under current asset. Next, credit balance in account of D, who is a customer. See, customer account generally will have debit balance when they purchase goods on credit. That is, when you sell goods on credit to the customer, generally it will have debit balance. But if the customer account is showing credit balance, means that customer has given you advance money. Okay, so it is advance received from customer. Since advance is received from the customer, you have an obligation to pay that customer, or you have the obligation to deliver the goods or services. Okay, what is primary is obligation to deliver the goods or services on the promised date and time, and if you are not in a position to do that, you have to return back this advance received from the customer. So for that reason, this advance received from customer is a liability, and this will appear under current liabilities in the balance sheet. Next one is outstanding rent. All this we have discussed in final accounts adjustments, that first 18 adjustments, right? In that, outstanding rent indicates you have an obligation to pay to the landlord. The rent has become due, but you haven't paid it. So it's a liability. It is payable immediately, so it will appear under current liabilities. Next, insurance paid for the next year. So a portion of insurance is paid for the next year. So this is going to give you benefit in future, and you need not pay for it in future because already you have paid for it. So it's an asset, and it's basically a current asset. So this appears under current asset of balance sheet. Then loan taken from HDFC for 7 years. So here the loan is taken for a longer period, right? It is not repayable immediately. It is payable over a period of 7 years. But this long-term loan will have something repayable in the very next year, right? Even though the loan was taken from HDFC Bank for 7 years, The payment will be like this. In the first year you have to pay something, second year, third year, fourth year. So you have to pay like this every year. So when the loan is taken, what is immediately payable in the following year, that will be classified as current liability, and what is payable after 1 year will be classified as long-term liability. Okay, because you have taken a long-term loan, that does not mean you have only long-term liability, because some portion of the loan, if it is repayable within next 1 year, that have to be classified as current liability. For example, let me give you a number. Let's say 50 lakh is the loan you have taken. So this is now. Now I am saying that in next 1 year you have to pay 10 lakh, second year 10 lakh, third year 10 lakhs, fourth year 10 lakhs, and fifth year 10 lakhs. Here this 50 lakh is a long-term loan, but of that this 10 lakhs is not long-term, it is short-term because it has to be repaid within 1 year. So this becomes current liability, and the remaining 40 lakhs becomes long-term liability. Be clear about it. Next one, interest due on loan. So interest has already become due, so you have an obligation, immediate obligation, so it is a current liability. Provision for doubtful debtors. So you have made credit sale, you expect some debtors are not going to make payment on time. So this provision will be used for reducing it from sundry debtors under current assets. Okay, so this provision for doubtful debts, how it will be shown? It will be shown as a deduction from sundry debtors in balance sheet. Next one, net profit for the year. See, net profit already you have arrived at. In balance sheet, how you will show? This will get added under capital. Okay, basically it will go to the head called reserves and surplus. Reserves and surplus, and in particular this will go to the head called surplus, where it will be shown as a retained profit. It will be shown as a retained profit. Next one, missionary. Missionary generally is a fixed asset. But if you are into the business of buying and selling missionary, then that will become your current asset. Okay, so it basically depends on what kind of business you are into. Next one, accumulated depreciation on vehicle. See, this accumulated depreciation basically reduces the value of the fixed asset. So this will be shown as deduction from respective fixed asset. The next one is cash at Bangalore office. Cash at Bangalore office is basically an asset. To put it rightly, it is a current asset. Next, balance with Citibank. Again, this is also an asset. To put it rightly, it's a current asset. Okay, so in this video we have seen 15 different items as to how it will be shown in balance sheet. And if you really like this video, please click that like button and comment whatever you have learned, and please share it for the benefit of others. Thank you.